Oh, yes, we've got one over there.
Hi there, Katia Baba from Immersive Finance. We actually provide data and risk management for options in crypto. And I have been actually from an FX background, so I know very well Algo FX. My question is around the October 10. Actually, what caused and triggered the whole debacle there was Binance mispricing one of their collaterals. So I thought it was interesting because, yes, it did clear the market, but there is it sort of fits into this narrative that you were saying about, are they doing things properly, or are we just sort of see how it goes and try it on, and not having the sort of learning of years that other traditional assets had?
Good question. So mispricing on one venue. So that wouldn't happen anywhere else in traditional markets, would it? I'll take you back to, January 2016 SNB, okay? Some of the largest institutions in the world made a price of 0.2 in Swiss franc euro, right? And the world went into a tailspin. The right price was figure 1. That's it. The mid price should have been around 1. It went from 120. And all of a sudden, you got people coming in at 20, at 0.2, at 1.8. It was crazy, right? Because of a fat finger. But we did have a mechanism, right, to reprice trades. We did have a mechanism. Some people didn't like it, to re-rate, to cancel trades. There's no mechanism when you have a behemoth such as the name you mentioned, right, in the retail space. So, it comes back down to where you started, Niku, in the question. Unfortunately, we're going to have some efficient market structure and market oversight. And you're going to need to have, dare I say it, that separation of function, right? Do we just treat, it's blind faith at the moment that the biggest venue, and they are, retail leverage by far, that the pricing there is correct. If they have a technical error, I'm lucky in foreign exchange. Believe you me, if we make a wrong price, the market will close that arb very, very quickly, and they've got another host of venues to go and check that out on, right? So, it is a real, and I've said it before. There's that one. There's the biggest retail venue in the United States. They represent sheer systemic risk today. Mm-hmm. So we need to be cognizant of that.
Right. Got time for one more question.
Somebody must be great after me.
Oh, sorry. Yes, there.
Charlie Arith from Western Capital. Which are you more bullish about, crypto as an asset class or crypto as a technology?
I think, you know what, the asset class thing, I think it's going to merge into one. So I'm going to say no, not the asset class. I think there's a lot of profit to be made on the way up as digital assets converge with TradFi. The real win is technology that it's brought, right? Underlying immutable ledger, right? Underlying programmable, fractional, digitized money that will be foundational to all capital markets, that will mean you can move from S&P at 9 p.m. on a Friday into digital money market fund or yield-bearing dollar-like programmable Monday on a Saturday. And what about this? World events happen, and you can get in or out of gold and oil at 3 p.m. on a Sunday. That's exciting. That's 24/7 markets. By the way, that happens today, right? Plug in us a little bit. You can come and trade perpetual gold, right? 24 hours a day, 7 days a week today. Don't sit there at home anymore, right? Wondering what's the open going to be like on a Sunday night, Monday morning.